I'm going to address the both of you guys again. Let's back up and talk about tech investing more broadly in the context of what else has been dominating the markets, which is this rapidly changing geopolitical landscape. Todd, I'll go to you for this one. We've seen a good amount of volatility around some of the recent developments on the geopolitical front, specifically when it comes to conflict in the Middle East. It has been jarring for sure, but interestingly enough, not as jarring from a straight quantitatively volatile perspective with regard to the markets, as volatile as the tariffs impact were or was at the end and beginning of April, kind of into that May period. So what exactly do you attribute this bout of volatility to, and is tech a good enough theme to weather this kind of geopolitical risk?
So I think investors and advisors in 2025 are getting used to this being a more volatile time period than they were a month ago or 2 months ago or 3 months ago. I think they're more accepting of the volatility, but we certainly at the ETF flows level, we're seeing stronger interest in fixed income ETFs, in short-term fixed income ETFs, the earn some income and not take on much risk. And then also we're seeing people buy more broadly diversified ETFs. The Vanguard 500 ETF is on pace to again break the record for net inflows for a year before anywhere close before the end of the year. So people are using sell-offs as a buying opportunity. You asked about tech. Tech is the heaviest weighting within a broadly diversified large cap ETF like Vanguard 500 or others. So I think many people are having tech and AI as part of a broader portfolio as opposed to leaning in solely onto the technology sector.
Hey, Todd, as you look at the landscape for ETFs, there's been a time when some folks, investors out there, both on the retail and the institutional side, have viewed the tech trade or those mega cap type tech names as a maybe safe haven, if you can even call it that. But they were relative safe harbors in some stormy conditions. Does the tech trade from that mega cap level still appeal to some investors as a relative safe haven trade, or does it expose itself to even more volatility now because it's run so far so quickly in the past 10 or 15 years?
So Dan is going to have more of a valuation call than I am, but we're certainly seeing that investors that gravitated towards tech, in 2020 when we had the COVID sell-off, technology was the safe haven. That was the lowest risk part of the marketplace. Now we're seeing a flight to safety in the equity markets in some of the more defensive sectors, utilities or consumer staples. So tech is a relative safe haven, or I guess large cap tech is a relative safe haven, but we are seeing investors want the benefits of diversification with some of those more traditional defensive.
Following a frenzied reversal over the previous 2 months, Nvidia's stock gained 2% on Monday, bringing the AI chip giant within striking distance of an all-time high. Sales of the company's potent AI chips to hyperscalers and other nations looking to develop their own independent AI systems are still strong. About 3% off its record closing high, shares ended the day at $144.69 a piece. The most recent increase follows last week's GTC Paris event hosted by Nvidia in the French city. Jensen Huang, the CEO, also went to the nation's Viva Technology Conference. Despite this, sales of the company's newest Blackwell chips and associated server hardware helped it surpass revenue projections. Due to the company's involvement in the artificial intelligence (AI) revolution, Nvidia's stock has soared in recent years, rising an astounding 800% in just 3 years. Investors have flocked to this fascinating growth story as the leading AI chip designer in the world has produced record revenue, reaching $130 billion in the most recent fiscal year. However, since Nvidia's quarterly revenue shifted from triple-digit growth to double-digit growth, investors have been questioning if the stock will continue to rise. Additionally, the company is also facing a major obstacle in the form of U.S. restrictions on chip exports to China, which is a big market for Nvidia. Analysts predict that the worldwide AI market will develop at a compound annual growth rate in the double digits over the next few years, reaching over $2 trillion. As the industry leader in chips, Nvidia is well positioned to gain from this situation. Does that mean you can get a millionaire by using Nvidia? Let's investigate. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Dan, because we broached that topic and we opened the window or door a bit on this, the valuation story. What do you say to folks out there who believe that this tech trade, after having the run that it's had, is now not as much of that quote-unquote relative safe haven trade, because you would have wanted to be there 3, 5, 7, 10 years ago and not necessarily today?
Yeah, I mean, look, Don, me and you have talked about this for decades. I mean, my view of tech, if you focus just on valuation, you missed every transformational tech stock the last 20 years. And I believe the market is still, it is massively underestimating what the growth is going to look like for the AI revolution in tech. So I believe valuation, okay, over the next year, you could say some of these are expensive. You look at the next 2, 3, 4, 5 years, given our view of autonomous, robotic, that's why I think we're going to be talking about NASDAQ 20,000, 25,000 over the coming years. And that's why any type of geopolitical sort of events, we always view as opportunities to own these names cheaper. That's kind of always been our view the last 25 years.
Let's start by reviewing the past and catching up on the rapidly evolving Nvidia narrative. Originally serving the gaming business with its graphics processing units, GPUs, this company was created almost 30 years ago by its current CEO, Jensen Huang. These potent chips quickly became an excellent tool for various industries due to their capacity to execute numerous jobs at once. They also demonstrated their AI prowess in recent years, which let them create huge, potent language models in a very effective way. All of this has resulted in increased sales revenue and strong sales profitability, with the company's gross margin consistently above 70%. As previously stated, worries regarding Nvidia's future in China have recently disrupted the story of rapid development. A few years ago, the United States imposed export restrictions on GPUs that were to be exported to China. More recently, the company even stopped selling the GPUs that Nvidia had created especially to comply with these restrictions. The U.S. proposal to impose import tariffs has also been a source of concern in recent weeks. Electronics are currently often exempt, but the Trump administration claims that a tariff proposal for these goods is imminent. Let's now examine Nvidia's chances for the future. Although there are still issues with China and exporting in general, Nvidia has also acted quickly. For instance, Nvidia recently stated that 2 plants should ramp up in the next 12 to 15 months as part of the company's investments into U.S. manufacturing to lessen its reliance on exports. Though I believe this impact will be minimal given Nvidia's market leadership and the fact that the U.S. is the company's largest market, these investments and a lack of sales in the Chinese market could hinder growth. It's also crucial to remember that Nvidia's transition from triple-digit growth to double-digit growth is typical given the company's exceptionally large sales. When quarterly sales is low, triple-digit growth is considerably easier to achieve. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Let's kick things off, gentlemen, with Dan. And you just launched an AI-focused thematic exchange-traded fund. The ticker is, maybe not shockingly, IVES, Ives, your last name. Your name is literally on the line with this one. So let's talk about why and what exactly is the impetus behind putting an AI-focused thematic ETF on the market.
No, great. And look, and it's awesome to be here. Look, I mean, to me, it's really, I wanted a thematic way for investors around the world to ultimately, invest in the theme. I mean, when I travel around the world, how do you invest in AI? So this is really based on my AI Ives 30 report, understand who are the derivative beneficiaries, whether it's software, chips, consumer, some under the radar, some maybe on the autonomous side. And basically, this is a dynamic list. It's a dynamic 30 names. Every quarter, we're going to change in terms of some who come in, who ultimately come out. But Dom, for me, was really all the work we do to put it thematically in a way that investors, whether retail, institutional, could invest in this AI theme.
Now, it's a concentrated portfolio. It's only 30 names that we're talking about here. Without giving away the secret sauce, because you're a fundamental analyst, you look at certain factors and whatnot, what are the common elements or factors, if you will, that go into why these 30 names at this point? And you mentioned the rebalance. How exactly then do you know, based upon those factors, whether quantitative or qualitative, what then maybe goes out and what else would then come in?
Yeah, it's a great question. I mean, look, we spend all of our time, whether it's here, whether it's Asia, across Europe, understanding what are the technologies driving AI. So whether it's on the chip side, in software, what ultimately from an engineer perspective, from a customer perspective, who's ultimately driving, who's winning when it comes to the use case, whether it's Palantir, is it MongoDB, is it Snowflake? Then on the consumer side, whether it's, from names like Meta or some of the smaller names, who ultimately could play from a consumer perspective. So for us, it's our research. It's what we spend, my team spends all of our time doing, trying to understand who is driving the use cases, where is the technology going, but most importantly, what are the second, third, fourth beneficiary, then the derivatives of AI.
Now, speaking of those orders of differential, those derivative type plays, where are you seeing most of the portfolio drift towards? There's 30 names. Are they mostly the consumer AI names? Are they mostly the hyperscaler types? Are they mostly the hardware or the software or whatnot? What exactly do you see right now being where the most heat is, so to speak, in those picks?
And in terms of the heat, like it obviously started off as chips led by Nvidia, and of course they continue to be a core top holding. But it's software. In other words, the use cases are going to be driven in software. And that could be from hyperscalers to use case, whether it's Pega, whether it's Palantir, whether it's Mongo. Because I actually think right now we're in the software phase. I think software is going to be driving really a lot of the use cases. And I think we've seen it with Oracle and others, right? Because to me, that's really going to be the epicenter of the AI theme over the next 6, 9, 12 months. Terms of software, but it's trying to understand who within software. Just because they say AI on a conference call doesn't make them an AI player.
Now, Todd, this is an interesting one for a lot of investors out there as well, because this particular fund and these stock picks enter a kind of growingly crowded field in terms of thematic AI plays. From your kind of macro perspective, looking at the entire ETF market, just how competitive is it for asset managers and advisors to garner funds into the thematic ETF trade for AI? Or is the market, the TAM, the total addressable market, so big that it doesn't matter how many people enter because the demand is there from amongst investors, whether they're retail or institutional?
So we at Vetify, we find that advisors are using roughly 5 to 10% of their portfolio for more dedicated thematic investing. So some of the AI trends, we're going to see exposure in the triple Qs, the NASDAQ 100 ETF from Invesco and other technology-oriented ETFs. But there are some dedicated AI ETFs. The Robo Global Artificial Intelligence ETF, the ticker is THNQ, is a good example of that. It also takes a research-driven index-based approach. It's equally weighted around 50-55 stocks, and it's looking at companies that are both infrastructure and application layers tied to AI. So that's going to cover some of the technology areas that Dan talked about, but think THNQ also is going to have exposure to healthcare and robotics and sensors and things like